My name is Frederic Mariette, representing Natixis Bank in South Africa. We are the second largest bank in France, and I represent the investment banking arm of the bank. We also, unusually for a bank, we own an ECA with the COFAS in France, which is quite unusual for commercial organizations to do these things. As far as involvement in Africa, we have pretty broad-ranging capabilities in the sense of talking to a lot of the various countries, Nigeria, Gabon, Angola, South Africa. And the things that we like doing as a arranger and investor, and I can't really give you an accurate figure because the bank is so large, we do have a number of projects on the go here in Africa. But typically we'll be looking at minimum investment of about $100 to $200 billion investment into projects. That means that we need to have a project of $1 billion for us to start making significant investments. That said, we also are looking at smaller scale projects in the range of $40 to $100 million. It very much depends on the nature of the transaction. It depends on the currency of the transaction, on the country where the transaction is taking place, and how critical the deal is for the country where this is taking place. In terms of area where we like to be involved in, oil and gas, of course, that's quite natural. So we've been doing a lot of things in the region. Power generation, extremely important for us and extremely important for Africa. We've been in talk with the government here for the past 7 years on a nuclear discussion. As you can imagine, this is a massive 30 to 40 billion euro project where we are supposed to put a few billion euros ourselves into that kind of structure. On a smaller scale, still very big by a South African standard, Praza is something that we're looking at very seriously. We're talking about 100 billion rand, I think, investment. We probably be looking at putting 700 million euros into that kind of a structure. Bearing in mind that, of course, at the moment it is quite difficult to raise finance in Europe, as you may well know. We're having quite a few problems, European banks at the moment anyway. But apart from that, Transnet is also an organization we'll be looking at, and I think critical to us is to look at state-owned enterprises or some of our core clients in the mining field where we would like to follow them wherever they go in Africa. So if they have structures, mining set up in South Africa or Gabon or the DRC, we do, of course, are very sensitive to political risk, like all banks are. But because we're following a client, we take a different view on political risk. And we work very closely, of course, with ECAs and the various multilateral agencies. But we also have a very strong view on country risk ourselves. And we don't necessarily have the same views Anglo-Saxon banks may have, for instance. That goes back to history of French and Africa for many years. In terms of difficulties that we see in the region for us is, of course, always going to be the perceived political risk. It is very difficult to convince management in Europe that it is worthwhile to invest a lot of money in Africa, regardless of how developed the country might be. There are a lot of challenges for bankers at the moment, both from a liquidity constraints to actually raise money altogether. The returns are interesting in Africa, but the risk is also perceived to be very, very, very high. So there's a lot of discussion to be taking place between the sponsors, governments, and of course the multilateral agencies. Finally, just to close on what we're looking at, we have absolutely no issues with any of the renewable energies. The only issue for us is currency. If it is non-dollar based or non-euro based lending, or there's no element of euros or dollars in a transaction, we have a small role to play. If it is fully rand based, for instance, we have no role to play. We want to bring expertise in terms of structuring transactions, absolutely. If there is a mixed currency basket where we have to provide currencies, we are more than happy to work with the local banks, and I've done so for some years. But I think if it's a pure local domestic play, like we've seen recently with the renewable energy space, we have absolutely nothing to offer, unfortunately. But that will change. We know very well with the nuclear discussion, both in South Africa and the rest of the continent, is to have greater political involvement and decision-making taking place. Things take far too long to reach a decision in this region, which really can have an impact on the overall life of the project. I'll give you an example. In South Africa, for instance, we've been talking about nuclear generation for quite some time. We have Koeberg, of course, that's been there since the 80s, but the new project has been discussed for the past 6 to 7 years, and to date, still no real decision has been taken, really, to be honest. The minister is, of course, very keen on pushing things forward. We're all aware of that, but we have a sense from overseas, we see from the investors overseas that, unfortunately, things are not taking enough pace, and we're taking too much time to do things. And to give you an example, on the energy side, out of the current, I think it is $800 billion projects out there in nuclear generation, 200 projects, 70% is done by Japan, the rest is done in the UK, Poland, Czech Republic, a bit of in China, of course, you can imagine, quite a bit in China. But the South African portion, which is 6 reactors, is a long way down the list. And the risk that we're facing now is might not be any more capacity from the suppliers to actually build anything in South Africa. So we have to be very cognizant of the fact that, yes, these are very massive and important projects for a country. There are strategic decisions to be taken, absolutely. But in the meantime, from a commercial standpoint, the provider of service might not be available anymore to build locally power stations. From our perspective, when we arrange transactions in Africa, it often involves more than one ECA, and that's quite complicated sometimes when you have 2 or 3 ECAs working together, when you have DFIs working together, and then you've got government, you've got the private parties involved in transaction. Just to give you an example, in Gabon, which is not exactly the best risk in Africa at the moment, we're just finalizing transaction now. That's taken us 3 years so far of negotiations between 4 or 5 different DFIs and ECAs and multilaterals, each having different objectives. And of course, as a arranger, you sit in the middle of all this, and you've got to put money yourself into the project, and it's complicated. It is very, very complicated. So if you have on one side the private sector, and on the other side the government is willing to actually make things happen, like it did in Gabon, you can make things happen. You really can. But there needs to be a very strong political will for this to happen. And to your point, I think early on about having the communities involved in these things, because the impact of some of these large-scale projects touches everybody in the region. But it's very, very important to have absolutely everybody on board, and that's part of government to play there. We have on one side the government of Gabon, who has fairly large natural resources in terms of natural gas, which is not large enough for them to have a full-blown LNG plant to be built, but it's good enough for building certain products, like fertilizers. So what we've seen a couple of years ago was Olam, the trader, on one side, and Tata Chemicals of India on the other side, thinking that they should be doing something in Gabon, working closely with government. And very quickly, both realized all 3 of them realized there was a good joint venture to be put in place, one that would bring foreign currency income to Gabon, which is greatly needed for the country. And of course, for Olam and an off-taker of the fertilizers, working very closely with Tata Chemicals to build a project. Now, in terms of size, it was $1.3 billion, which is closing now 65% equity, 35% debt. And at the moment, we're in closing stages. So what we have learned so far is that it is paramount, and I keep saying the same thing, paramount to have government on your side, paramount to have good communication flow between the investors, the local manufacturers, so to speak, and of course the government. Otherwise, financing doesn't really work. Important to keep, of course, in the loop the ECAs, because the ECA provide a lot of the funding as well in the transactions. So as an arranger, as a bank, when you have to put some of your money into that kind of structure, you need to make sure that all the boxes have been ticked, and that's government, that's the other investors, the multilaterals, and of course the private companies.
Doing business in Africa, you can't afford to be without Africa Investor.